Hello everyone, good morning and welcome to today's morning report with me, Rich Perry, market analyst at Handtech Markets on Wednesday the 28th of January. The financial markets in the European session have started reasonably flat, although they had early gains that have just been eked out of the market just now, just moving back towards negative again. The early pre-session higher was due to the fact that Apple had such stellar results overnight, and certainly that will help to support the S&P 500, which, to be honest, last night had a bit of a poor day. Earnings season generally in the States is proving to be fairly dour. Aside from Apple, the corporate results are really focusing on such issues as the strength of the dollar and also the oil price. It'll be interesting to see how this really reflects through into the Fed tonight. That is where the market is now going to turn its attention. The Fed monetary policy statement is coming out tonight. There's no press conference, so just the statement for the market to get its head around. And it'll be interesting because pretty much across the board, all other central banks at the moment are moving into a more dovish positioning, and it will be very interesting to see if the Fed changes its statement or gives any sort of leaning towards the doves. If it does, then there could well be, you'd imagine, a bit of a short squeeze, perhaps after such a strong run on the dollar index recently. We've had this huge run higher in the last 6 months, accelerated to the upside last week from the ECB easing, just slightly off, and today it's pretty much consolidating sideways. Just a slight amount of gains, and that's due to the fact that the euro is slightly lower, 0.4%. Pretty much across the board, dollar is trying to regain a bit of upside, but also we've got the yen, which has strengthened interestingly in front of this Fed statement. So perhaps there is a slight air of caution going on with this move. Other than the Fed tonight, you've also got the US oil inventories, which last week spiked to 10.1 million, which was actually, if I zoom out, it's actually the highest, highest for a good long while, back to the early 2000s on that. So that was last week's reading. It does have an impact certainly on the oil price, and last week the WTI price, for example, fell quite sharply on the news that the inventories were so high. So it'll be interesting to see if the 4.2 million barrels of inventories has an impact on the market, and if it is higher than 4.2, then presumably that would be weak for oil, pushing oil price back lower again. So watch out for that this afternoon. That could have a knock-on impact on equity markets if that were to be the case. Also, we've got the RBNZ today, the Reserve Bank of New Zealand policy at 8 o'clock. No change expected from the 3.5% interest rates that they have currently there, but being, I suppose, the fact that other central banks are cutting monetary policy or easing monetary policy, there could be a downside risk on that. So that takes me to my chart of the day, which is the euro yen. Now, I spoke, this is on the hourly chart, or wrong one, daily chart first. Euro yen last week had this big break below 135. I'll zoom out and show you that that was a big key floor that had been supportive. Broke last week, strong breakdown, took the euro yen to oversold. However, you can see that we have a bullish divergence on this euro yen on the stochastics and also the RSI. Interesting. MACD line is not really showing too much sign of life yet, although the histogram is beginning to move higher. However, this rebound that we've already seen, 2 strong days to the upside, now needs to break through that 135 level. Today, when I wrote the morning report, it was fairly positive actually, the outlook. But in the last couple of hours, actually, we've just started to drift away again on the euro yen, and it seems as though that 135 is still a big level of resistance. And we've had this technical rally that's set in. On this hourly chart, you can see that the configuration is still pretty negative. The RSI through this technical rally has never been able to get back above 70, and it's sort of falling away again. MACD lines are in positive territory, however not in a strong way, certainly not as strong as where they have been in the negative side during the big sell-off. So it's just gives me a little bit of concern that this technical rally might be sort of beginning to run out of steam a little bit. And even then, if you look at this hourly chart on a longer term basis, you can see that there is a big downtrend in play, and that 200-hour moving average, which capped the upside last week, is still falling, and that's now just below 135. So 135 is a key level on euro yen, and it certainly seems as though at the moment this is just a bear market rally that could well be sold into. So it'll be interesting to see if that happens. But anyway, I wish you good luck in your trading on euro yen today, and I will speak to you later. Thank you.